Bro, this drop in the markets is nasty. The S&P was up over 3% in pre-market. The Nasdaq was up over 4% in pre-market. And now the S&P 500 is almost negative, going from a high of 414.10 in pre-market now down to 399, sub 400. What in the world is going on? CPI came in much better than expectations, and yet the markets have been falling off of a cliff. Guys, let's get into it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section. This is going to be a wild one, so definitely strap in, guys. So consumer prices rose less than expected in November, up 7.1% from a year ago. The consumer price index rose just 0.1% from the previous month and increased 7.1% from a year ago, compared with a respective estimates of 0.3% and 7.3%. So the month over month was much better than expectations. You're almost in deflation, and the year over year came in 0.2% better. So this is the best beat to inflation that we have seen in all of 2022. So why is the market selling off like this? Well, part of it is we have the Fed meeting coming tomorrow. The other part of it is inflation is not coming down fast enough. But the biggest part of this drop is the markets are getting suspicious of valuations. And I say suspicious because nobody really knows where valuations should be, because it all depends how much earnings fall. So you've seen a lot of banks come out and revise their earnings estimates, and by doing that, it says, hey, maybe the fundamental valuation should be a lot less. So the top estimate you're seeing for 2022 is around 420 on the SPY S&P 500 index, and you were almost at that this morning. So if you have Fed Powell coming tomorrow, which is widely expected to be very, very hawkish, and you have lower earnings coming in 2023, the stock market shouldn't be trading, or the S&P 500 shouldn't be trading at almost, a record valuation still. It just shouldn't. So that is really what is happening here today. And CPI, which, a couple months ago we wouldn't have said this, CPI doesn't even look like it matters right now. The risk is of a recession and earnings falling, guys. And this is taking its toll on AMC. If we take a look at AMC is almost at lows for 2022, sitting at $5.60 per share. The low for 2022 is $5.05 per share. So we're close to that, still above it. We want to see if we find support at that level, or if we flush to a new low. If we're flushing to a new low, the stock market itself probably going to be in a pretty bad spot. So keep that in mind. AMC is probably not going to move alone in that regard. So as far as the data behind AMC, we'll get into that in just one second, but I do want to talk about the Fed meeting tomorrow, because this will be so very important, and it will happen at 2 p.m. So you will have some time. It's not like you're going to wake up like you did today and CPI is already out. No, it's going to happen at 2 p.m. and you're going to get that initial readout, right, of why the Fed raised rates 50 basis points. That's the wide expectation for tomorrow. Any less, any more could really freak out the markets. If it's a 25 basis point rate hike, not expected to be, but if it were to be, the markets would freak out and sell off, because why is the Fed giving us smaller rate hikes than we expected, and inflation is 7.1% year over year? That would be a big problem. Whereas if we get 50 basis points, the markets understand that, we expect that, shouldn't be a big deal. But depending on what the Fed says in that report and where the Fed dot plot is, that is what is going to give us the big move, because right now markets expect 5% is the terminal rate. That means after this 50 basis point rate hike, we're at 4.5. So that's implying one more 50 basis point rate hike or two 25 basis point rate hikes until the Fed is done raising rates. But the question is, if inflation stays at 3 or 4% even into the end of 2023, does the Fed continue to raise rates, or do they lift their target, right? Instead of 2%, do they then say 3% is okay, or 3.5% is okay? That is yet to be known, but the markets are kind of starting to look at this. You know, you're tightening into a very weak economy, and inflation is not coming down fast enough, and it looks to be pretty widespread, because even in the last month, guys, housing went up. Other sectors like food also went up on the month, and actually accelerated in housing. So we're trying to cool down housing, but yet month over month it actually just accelerated. So I think that could be part of why the markets are selling off too. The individual sectors of CPI, some of them were not that good, but it's being widely offset by a 2% drop in the price of oil. So there is that. For tomorrow as well, after 2 p.m., you are going to get the Fed press conference at 2:30, and that is what is going to give you the final move. That is what is going to solidify, are we bullish, are we bearish, based off of this drop after a wildly bullish CPI report. You gotta be on the fence here, guys, because this should have been taken very positively, and if anything, this chart should have looked like this. Let's draw a trend line here. Chart should have looked like maybe like that, and then maybe like that, and then typically what we've seen in 2022, you kind of skyrocket towards the end of the day, right? This is what this chart probably should have looked like. You probably should have ended around like 418 on the S&P. Instead, you're under 400 right now. So you gotta take that as a leading indicator that things could get pretty bad, especially if that dot plot indicates federal funds rates will stay higher for longer and not get cuts in 2023. Markets are expecting the federal funds rate to get cut in 2023, and I think that is a big deal if we fall or rally tomorrow, guys. As far as AMC stock, AMC is down about 6%. Let's get into the Ortex data now, guys, because it's very interesting. So the option activity for the day, 20% positive order value, 38 orders totaling $3.87 million. So not a huge day as far as options, definitely not a positive day. And you are seeing a decent amount of options. Almost $4 million worth of options. That's a lot bigger than what we seen yesterday. $1.32 million in options, almost 4 times the amount, and almost 3 times more bearish than what we seen yesterday. So that's a big reason why the stock is falling. I don't think any more retail investors are selling than what have already sold. I don't think it's like that. I think it's simply the option activity from institutional investors helping to push down the stock, as well as your shorts that are obviously taking on short positions. And even after Ortex has revised their short interest numbers down a lot, they are telling us short interest rose by about 2% today. The amount of shares that are now sold short is almost 96 million, 95.93 million. This is up 2 million shares on the day. So if you get 2 million short shares on a day, let's go ahead and take a look at the volume, where the volume is 24 million. That's 10% of shares just being sold short out of the total volume for the day, and that is going to get you a 5% down move, exactly what we are seeing. Now, as far as the shares available for the day, shares are not relatively available. 0 shares, 600, 0, 2,000, 3,000. Not a lot of shares that are available, so it is helping to keep these cost to borrow rate numbers up and even higher than they were yesterday at about 20%. Cost to borrow average at 22.11%, cost to borrow max at 28%, and cost to borrow minimum at about 8%. So these numbers are still very, very high, guys. Now, as far as the technicals here and everything else you need to know, not too much to actually say about tomorrow besides the Fed at 2 p.m. So I don't really expect the beginning of the day to be a big one. I don't expect a big up day. I don't expect a big down day. But once you get that report that comes out, and especially the press conference at 2:30, you're going to see a very big move in the stock market. And if you're not prepared to see a big up move or a big down move, well, you should probably take this opportunity today to get out of that positioning, because you could either get blown up tomorrow or you could make a lot of money tomorrow. I doubt there's going to be one way or the other by the end of the day, guys. And as far as AMC, even like we've seen in pre-market, you almost hit the 50-day moving average. You were very close to it. AMC was up 7% in pre-market and actually rallied in the first minute or two of the trading day, and then got beat down just alongside the market. So take all of this information in. If you have to, rewatch the video. This could be the biggest day of 2022, or at least the last big day of 2022, and could even set us up for, dare I say it, a stock market crash or a fat rally, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in that comment section, baby. If you guys want to come trade with me live in real time as well, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.